Sailesh Bhan joins us now, CIO with Nippon Asset Management. Sailesh Bhai, good morning. Thank you for joining us. Did you actually miss my first question?
No, actually, I missed out the first question.
You missed out the first question. Okay, I'll start with markets and then we'll talk about mega trends. But what is your view on the market? Do you think the summer rally of 2023 is real, and the Indian markets have long way to go before we week out, whether because of valuations or whether because of euphoria?
See, if you look at how the markets have rallied and run up in the last few months, clearly there is a case that valuations certainly in pockets are getting stretched. So even though longer term, the long reforms which have happened, the medium term opportunity for India remains very strong. But there is a case we are finding that in a lot of pockets, euphoria is getting built up, especially select pockets where mid-sized businesses or the IPO frenzy which is building up. So there are pockets in the market which are clearly getting into the zone of, as you call, some frenzy where valuations don't make sense. Larger caps within the space appear to be very sensibly priced and offer possibly the best available risk reward in the marketplace versus other categories today.
The sector which you track with the magnifying glass, and you've created huge amount of wealth for investors, and that's pharma. It was a great 2020, it was a terrible 2022, and it's turning out to be a decent 2023. What is the trend in pharma? And if you can be slightly more descriptive here, Indian pharma versus global pharma, generic versus API, what are the trends you are witnessing?
See, very simply, if you look at this particular space, it had, with a very low base of the last 12-18 months, is starting to come back strongly. Directionally, the long-term, medium-term opportunity in this space is, very significant, because possibly whatever we talk about in terms of younger demographics, India also has a very large 50-plus population, as we all know. So directionally, the sector from a demand perspective is very well placed, significantly on the domestic branded side of it. US, which has been a challenging market for the last 3-4 years, is actually now turning out to be interesting, because there is a lot of price increases happening in select pockets there. There is a lot of shortages in some areas, and it's certainly come back as a strong, I would say, a temporary shorter term opportunity for a profit point of view. But the longer term main structural opportunity is the branded generics market in India, which just continues to evolve, continues to grow, and it is still significantly underpenetrated from any way you look at it. You look at the chronic side of the nature of the market, which all of us know. I think that also leads to a fact that there is a large part of challenging disease structures in India, which needs solutions which are really, really long term. So I think, can this space do what it did in the last 20 years in terms of volume growth? I think that possibility exists, and that is why this sector, after underperformance in the last 12-18 months, where valuations have also become very good, I think is well placed. Raw materials, which were a big concern area because costs had shot up dramatically, I think with the fall off in chemical prices globally, I think the benefit of lower raw material prices also coming in. So all in all, very good valuations, very sensible price to earning multiple for these businesses, and strong or large medium term opportunity for growth. So when you look all of this together, I think the space looks interesting. Other area within that, you talked about APIs and all. Today there is a challenge in terms of API pricing generally, because they've come off from the extremely high profitable levels which they were a couple of years back to normalized profitability. I think within the API space, the right to win is with businesses who have created the right cost structure. Are they in bottom quartile in terms of costs, and have they scaled up in specific products which have that advantage? When you manufacture at that scale, your costs really come down significantly. So I think only in select areas where you have built the sizable cost positions, I think that is where, and those set of businesses in APIs will do well. Regular API businesses will have fleeting profitability, which depends significantly on raw material price changes, which may not lead to long-term returns to investors.
Okay. Banks is where everybody is excited about growth and the underlying construct of the economy. But do you think banks is more like a consensus view now? And the view with any consensus is that you're not going to make splendid returns.
So, very rightly put, yes, it is a consensus view, and and these are very large part of indices themselves. But what is interesting is if you split the market into good growth and good valuations, this is one space which stands out along with pharma and power and utility space. And here the construct of the banks is, in a way, the ability of them to compound still remains because the whole investment cycle and all that is in front of us. So in the large cap space, this is one space which has disproportionately attractive risk rewards versus normal. And the balance sheets, as you all know, have been very strong enough. Yes, it's consolidating more than usual. Other parts of markets are performing. But if you look at it, the last 5 years have been a banking story in India effectively, right? So I think after consolidation, banks will, in all probability, become important leaders along with pharma and power sector as important categories to play in.
Why are utilities doing well? Normally utilities do well when there is nervousness in the market, when interest rates are likely to come down. These are stocks, like Buffett says, they can keep you rich, but they don't make you rich.
Yeah, so it's an interesting way of looking at utilities. Interestingly, in India, growth is coming back to utilities, especially the power utilities, because of the energy transition which we are under. So in the last 10 years, growth rates were very moderate, low single digit. There's no great capacity addition and all that. But if you look at the way India is transitioning in its energy mix, where you have nearly 50% of energy in the next 10 years wanting to come from renewable, I think the ability and the investment opportunity of those utilities is very, very strong. And they become effectively medium or mid-sized growth businesses. So they are no longer the slow growth or low growth businesses, and the valuations for that growth, that visibility, are still very, very low. So I think it's a cyclical change which can last for 5-10 years in terms of growth rates in utilities or power utilities especially will be way stronger than they have been in the past decade. And as you know, the size of these markets are very, very large. We are looking at billions and billions of dollars of investment happening, and there are only a few real good quality balance sheets in India who can actually deliver this. So utilities actually are a good growth story rather than just value plays in the market.
Interesting that you're calling utilities not just a value play but growth stories as well. And the other growth stories where you seem to be invested is the entire consumption and leisure theme, because you're right in Indian hotels, a chalet and EIH, etc. in your portfolio as well. Talk to us about what's your view there, because I also see Zomato, etc. and even ITC for that matter.
So interestingly, if you look at the sectors like hotels, which were completely mispriced a few years back because they had a very bad cycle, presented very good opportunities to participate in. And the focus on there was the real capacity creation has been very slow in the last 5 years because of the problems of the past. And hence, as demand recovers, you get better pricing. I think we are possibly seeing very good pricing for hotels, and the ARRs are very good for the particular space. And the medium-term opportunity also remains good because now you're getting back to growth, getting back to investment for the next few years. I think this shortage or supply shortage problem in hotels, I think, is here to stay for the next 3-4 years, because any new capacity creation takes that time to come through. The second part you referred to was new age businesses. I think there are some new age businesses which have a right to win and where valuations are reasonably sensible, at least sensible in the sense that they are back to profitability and you can allow to or look at gauging what's possible or what kind of cash flows those businesses can generate. And the intensity of competition is completely eroded there. So some select right to win businesses are appearing in the new age space, which have fairly long opportunity in India to participate. I think those are spaces which look interesting, and consumer and food tech businesses are some of these.
Okay, fair enough. What about your outlook in terms of looking at the defensives? In a market such as this, do you believe that one should be really cushioning the kind of volatility that we've seen by parking their money in sectors like, say, FMCG or pharmaceuticals?
Pharma, I just asked.
Yeah, so it's an interesting point, where, the whole way, we have seen a one-way rally in the last few months in the markets. In fact, when you look at broader valuations, there is, if you segment and see, certain pockets of the market are showing that froth which is there. Our approach in this environment is to, move money out of the expensive, frothy parts of the market, which are clearly less than 5,000 crore market cap businesses, or maybe in select manufacturing engineering businesses where you are valuing the moon already today in the part of the cycle. And I think from these, you move to large established utilities side. You talked about banks or areas in consumer, where at least in select spaces where consumer valuations are a little more sensible, I think those are the spaces which are there. The earning trajectory of these spaces is good, and even if there is a little bit of premium valuation there, the defensiveness they provide is certainly much stronger than the frothier part of the market. So I think there is a time to recalibrate risk, and I think when everything is going good, I think the ability to recalibrate risk will be important in retaining the wealth you have created over the last few years in India.
Talking about the frothiness in the market, and what comes to my mind is the recent listings that we have seen in terms of IPO, starting with listing gains of 80, 90, 100%, big subscriptions coming in. Does it make you nervous at all? Because the last time we saw this frenzy was the entire manufacturing theme when Keynes, Dixon, all of that had got listed. What's your view on manufacturing as well as the IPO frenzy?
So let us look at, say, the IPO frenzy which is happening, right? And if you look at the valuations at which these companies are coming themselves are fairly rich. And then on top of it, you're seeing some of these businesses getting listed at 70, 80% higher gains. I think this is more a reflection of the froth and frenzy than the quality and the longevity of those businesses. We have seen a lot of businesses, the percentage success rates of these IPO businesses primarily because once they are in the market, once they are tested, once they grow, there is a scale related challenges which comes to a lot of these businesses. So I think the risk of owning some of these businesses is way higher and versus, the return expectations one can run with. So there certainly is meaningful froth. Coming to the manufacturing side, well, we are at a cusp of an important manufacturing journey, and I think in the next few years, certainly this is an important theme to play. But what we are finding is when you look at select pockets, because there are the good part or the bad part is there are lesser set of high quality businesses in the space to invest and stay invested for long. But quality businesses here are now getting 40, 50 operating profit multiples, which are very high. So there is no room for disappointment in these spaces, even though the cycle and everything is very strong from a 3-4 year point of view. A lot of these businesses have gone up 8 times, 10 times from the last time we spoke, maybe 3 years back on this space. So I think we have to be cognizant from a fact that the risk reward from some of these businesses actually drops, and now going below the line in terms of lowering the quality curve in trying to choose businesses is very risky, and that I think is happening in the manufacturing space as we speak.
Okay, Sailesh, on that note, we'll let you go. Appreciate you making time and speaking with ET now today.